Although the name is GoGold, believe it or not, we are gold, gold, and silver. And in fact, we will be producing more silver than gold by value. We are a producer. Currently, we produce about 2 million ounces of silver equivalent in Mexico. I myself have been doing this for about 32 years. I'm getting ready to build mine number 5. And all of that, or almost all of that, has been in Mexico. I'll tell you a little bit about our history down there, myself, and these are all the companies I've led over those almost 30 years in Mexico. In Gammon, that was the very first one we did, and we built a large underground, well, at 1,500 tons a day through a mill, and we also built there an 1,100 tons a day going to a heap leach, and we moved about 100,000 tons a day. Mex Gold, there we went in and we bought from private family. We bought the El Cubo mine from the private family that originally owned it. We bought that for $20 million. We had a shell, Mex Gold, and we, with the help of the Bank of Montreal, we put $45 million in that shell. And we bought that mine, we doubled the production. We had 900 people working there. And 3 years later, we sold it for $175 million. Nayarit, that was a small discovery we made in 2010. We sold that to Capital Gold for $80 million. But GoGold, I'm the CEO of GoGold, and we've been operating GoGold now for the last 12 years. And at GoGold, we do operate a mine, the Parral Tailings Retreatment, where we retreat 300-year-old mine tailings in a city of 135,000 people. We generate silver and gold, lead and zinc, and cash for the company. We're making now about 1.8 million US free cash flow a month. And also the community is our partner. We pay them about $75,000 a month. But the company's getting ready to embark on our next big mine, and that is the Los Ricos project in Guadalajara, or near Guadalajara, Mexico. And there we're getting ready to build a 2,000 ton a day underground mine. Just 2 days ago, we put out our definitive feasibility study. And that study was a year in the making, cost us $4 million, but we took it from a PEA to a definitive or final feasibility study along with a front-end engineering design. And what does that mean? Well, a PEA can be plus or minus about 50%. A pre-feasibility plus or minus 25%. We're at plus or minus 10%. And in that study, we have a bulk mine. Well, we actually are going to have planning on having 2 mines in this district. We're now embarking on building Los Ricos South, and that's a bulk underground mine. What does that mean? It's not narrow veins. We have an average mining width of a little over 11 meters. That'd be approximately about half of this width of this room here. And you can imagine when you're mining something that wide underground with long hole drilling and high grades. I mean, the excitement of drilling this first 250,000 meters of drilling here was pretty exciting. And talking about the Lassonde curve, yeah, you get way up there in the Lassonde curve when you're discovering this. And we've pulled back as we've got to what comes next, which is the real technical stuff, the real studies, the real putting all the meat on the bones here. But you think about mining widths that are half the size of this room, going in and long hole mining it, very productive method, and then you dilute that even at 28%, and we're still looking at grades in a definitive feasibility study of over 300 grams per ton. And in fact, in the first 2 years, this mine will be in production in Los Ricos South. At current prices, after-tax free cash flow will be over $240 million US. So we're very excited about getting going on Los Ricos South and adding about 7.2 million ounces a year to the supply of silver equivalent, along with the 2 million that we've been producing we are producing at Parral. So we've been doing that now for the last 10 years. So we're going from 2 million with this mine built, and it'll take about 30 months till we get to full production. That will bring us up to about 9 million ounces a year at all-in sustaining costs, right around $12. And at the same time we're doing that, we are preparing our Los Ricos North, which today has a preliminary economic assessment, early stage. The margins are more plus or minus on that, but at current pricing that we've used in the final feasibility study in Los Ricos South, you would be looking at NPVs of over $600 million. So when you look at our company and you say, in Los Ricos South, $355 million. The North, albeit an early stage of study, PEA, we'd be at current pricing. And I say current pricing, I mean 3-year look back and the average of consensus pricing. That'd be about $2,300 gold and about $2,680 silver. Then you're looking at a district with NPVs, around $1 billion. Plus our little operating mine that we've been operating for 10 years at around $80 million. And today we're trading just around, and that's US dollars, I'm talking everything here is in US, we're trading around 300 million. So what's holding us back? Right now we need a permit in Mexico. And a lot of people in the room might know that permits have been a little hard to come by the last 3 years or so in Mexico. We applied 2 years ago. But we have a new president, and she has publicly stated that she's going to get the permits moving. We've seen permits move here, in fact, even last week. Grupo Mexico, they had 3 extension permits granted, and they've been waiting 3 years for those. We're seeing some other movement in permitting in Mexico. I've had meetings with the Department Secretary of Economy in Mexico, myself and 10 other mining companies back in November. They laid out the plan of what's going to happen as far as permitting. The new president came into office the 1st of October, and we're seeing that plan unfold. We feel that we're on a short list to get a permit, and we are hoping, anticipating that we'll have that permit by the end of March. And what's that mean for us? If you look at the analysts who cover the company, we're currently trading about around 0.3, depends whose coverage you're reading. And really, outside of Mexico, except that Mexico has had an overhang of the past president and slow in giving permits, we should be trading probably around more like a 0.6. So as you can see, that's almost doubling. That catalyst of that permit will be probably one of the biggest catalysts the company has had. And then it's into breaking ground. Our study is at the point where not just final feasibility, but it is a front-end engineering design. Like with permit in hand, with our balance sheet, and I didn't mention that, we do have on the balance sheet 76 million US cash in the bank, no debt. We're adding every month to our cash balances. And we have 8 term sheets for the rest of the capital to build it. And we're in final stages of discussion there. We've kind of narrowed it down just to a couple term sheets. So cash in hand, permit in hand, hopefully by the end of the quarter, and we start building that bulk underground mine. And really, we see GoGold over the coming years moving from 2 million ounce a year producer at Parral to 9 million ounces a year. And from there, with Los Ricos North, moving more towards 15 or 16 million ounces a year. So it's GoGold, the next emerging mid-tier silver producer and beyond, and at all-in sustaining costs of approximately $12 an ounce. So there's a lot of risk in this business, but I believe the way you mitigate your risk, it's a very technical business, so you deal with people who've done it before. We've built 4 mines. This will be number 5, Los Ricos North, number 6. You do it with people who can raise money in the market. I've raised about $2 million, myself, my team, over the last 20 years of equity, plus hundreds of millions of dollars of debt deals with the likes of Scotiabank, Bank of Montreal, and private equity. And that's, I believe, in a risky business, how you mitigate your risk. So thank you very much.